So what really matters is the subject of the session today.
Okay, well, thank you very much. Just before Rosanna gets going, because she's going to do the earlier and bigger part a little bit. It's a team of 5. It's one of these things that sort of emerges, like most places do. The colleagues in Spanò in Napoli work together as a team, and I've worked with some of them separately together for several years now. And just as ideas keep coming. And so we put together in this paper different inputs, different perspectives, and we would actively like, reaction, comment, suggestion, advice. And if you want to interrupt at any time, please do so.
Okay, hi, thank you for being here. Very quickly, this is the agenda of the presentation. I will run the first part, so basically explaining the focus of the study and the layout of our research, and then focusing more in deep on the issues related to the incoherence of the IASB accounting system and the coherent theoretical model, which is proposed by Economia Aziendale, which, very short for now, is the Italian leading entity theory, which has important accounting implications. And then we'll conclude by explaining the comments and the arguments that we raise in relation to the issues of the business model and faithful representation, and still the possible contribution of Economia Aziendale, and also the conclusions of our analysis. So, just to be clear, this paper focuses on the incoherences of the IASB accounting system, which in our study is considered as the sum of the conceptual frame plus the single standards, in relation to the reporting of holding gains and losses. We aim to elucidate how this can be rendered more coherent and meaningful. And I would like to emphasize that the idea to focus on the reporting of holding gains and losses came up during the AAA conference 3 or 4 years ago, because we were commenting the fact that the IASB has been working on the project for financial statement presentation for several years, but still agreement has not yet been reached on issues that are relating to the reporting of holding gains and losses and to the concept of comprehensive income. Looking at the literature on these issues, it is evident that many academics, but also practitioners and regulators, comment that probably the real problem that creates an incoherent treatment of holding gains and losses is the lack of strong theoretical foundation in the IASB accounting system, available for the concept of comprehensive income, which is never defined, for example, in the concept of income. And recently, the chairman of the IASB has recognized that probably there is the need to clarify the basis upon which different gains and losses are reported in different ways, and has tried to ensure people that in the ongoing review of the conceptual framework, the IASB will try to make income presentation more coherent and meaningful. So let's see what happens in the future. But for now, we started to thinking about this big problem, this huge problem, from the perspective of the decision usefulness of information. Starting from the definition of information, that to ensure decision usefulness needs to have 2 characteristics: relevance and should faithfully represent the real world economic phenomena that it purports to represent. But going through this concept, what is important to understand is that to correctly understand what representation of faithfulness practically entails, there is the need to get a strong preliminary comprehension of the concept of truth and reality in the context of financial reporting. And as some of you probably know, there is a strong debate on what truth and what reality mean in the context of financial reporting. And there's also, there are 2 schools of thinking, that there are the advocates of the correspondence theory that assume the existence of an external reality for financial reporting, and there are people who assume that probably a coherence theory could be more helpful, assuming that there's an internal reality and so there's a relativization of the concept of truth and reality. And in this regard, there's a paper by David with Simon Archer that emphasizes the possible relevance of the coherence theory of truth in explicating the relationship between accounting and its objects. And there are many contributions that assume that the coherence theory of truth should be useful. And this is the starting point of our conceptualization, in that we employed the coherence theory of truth to discuss the incoherences inside the IASB accounting system, and to contrast these incoherences with the more coherent theoretical underpinnings that are proposed by Economia Aziendale. And in relation to Economia Aziendale, I would like to emphasize that we decided to focus on this normative theory mainly in the wake of the call made by Niveri in 2003 that was arguing in her paper that probably the reference to a normative theory could be useful to solve a number of issues related to the incoherent treatment of holding gains and losses. And in particular, we decided to adopt the Italian Economia Aziendale because, as we will examine more in depth later, Economia Aziendale is the Italian leading entity theory, and it is well known that now IFRSs are widely used around the world in countries that present different characteristics in comparison with the country that originally adopted IFRSs. These countries are characterized by a kind of real economic context full of real entities by saying real entities, I mean entities with a strong productive nature rather than a strong financial market orientation. And these countries present, from both the legal and the governance perspective, a number of characteristics that are similar to the Italian context. So probably the reference to the Italian leading entity theory could be useful to put forward our argument in terms of coherence and incoherences inside the IASB accounting system, and how the treatment of holding gains and losses could be rendered more coherent and meaningful. So the first step in our research was to theoretically demonstrate the claimed incoherences of the IASB accounting system. And to the same, we adopted the Dorsey model. Dorsey practically applied the coherence theory of truth to ethical thinking, creating a theoretical model based on several propositions, several formulations for the concept of truth and for the concept of coherence. And we just took the final formulation that Dorsey elaborates. One is for the concept of truth and one is for the concept of coherence, and applied and adapted these formulations to the context of the IASB accounting system. So we started from the formulation T3, which is the formulation of truth, by stating that the IASB concept of profit is true in the IASB system if and only if the concept of profit is a member of the IASB system and the IASB system is coherent, or the concept of profit is a member of the IASB system star, where the IASB system is coherent according to the Kenyan doctrine of minimal compilation, yields the IASB system star. And with regard to the first sentence, we see that, as you all know, the concept of profit is clearly defined in the conceptual framework, so is a member actually of the IASB accounting system. And the first condition is satisfied, but we still don't know, we still have to test if the IASB system is coherent or not. And therefore we switch to the second formulation elaborated by Dorsey regarding the concept of coherence, by stating that the IASB system is coherent if and only if for all normative sentences related to the concept of profit, the concept of profit is consistent with all other members of the IASB system and also their normative implication, and is derivable by a system of deductive logic or inductive generalization. And to verify coherence, if coherence can be detected in the IASB accounting system, or better, to prove that coherence cannot be detected in the IASB accounting system, we refer to several explicative cases considering the elements that are cited in the context of conceptual framework as essential elements for measuring profits. Let's say the recognition of elements of financial statements, the concepts of capital, and the concepts of capital returns. And on the basis of this analysis, in which we mainly refer to the accounting standard 41, 16, and 39, we could actually verify that the IASB accounting system is not coherent, and so both the formulation of coherence and the formulation of truth are not respected in this system for a number of reasons. The first reason is that the conceptual framework lacks coherence in itself, because the extant definitions of income and expenses are based on a clean surplus approach. But the difference between income and expenses does not lead to the measure of profit. And one of the main problems in this regard is that the comprehensive income was introduced, but there's not a clear definition of what comprehensive income is and what comprehensive income entails. The first problem that we detected is related to the IFRS, because we know that the conceptual framework is based on clean surplus approach, but the IFRS allow dirty surplus accounting. And this is evident when we look at the capital maintenance adjustment and also at the problem of recycling, which, however, is one of the most discussed in many comment letters. And another problem is that the conceptual framework clearly states that an entity has to choose its concept of capital maintenance from between the two allowed in the framework. But there are also accounting standards, such as the 16, that allow the coexistence of the two approaches in the same IFRS. Still, the application of capital maintenance sometimes is not always consistent with the expectation of some items, and this happens, for example, with agriculture products, and there was also strong criticisms on the agricultural issues by the Malaysian accounting group. And in the end, in relation to recycling, bearing in mind that recycling is not coherent with the conceptual framework, in any case, another problem is that recycling is not treated homogeneously across the IFRS. So, at this stage, we started to introduce the issues relating to the Italian Economia Aziendale. And before focusing on how Economia Aziendale ensures the respect of the condition of coherence, I would like to give you a brief summary of the theory, which, however, is treated more broadly in the paper, but if you cannot catch everything, please feel free to interrupt me. Economia Aziendale was announced for the first time in 1927 when Gino Zappa had his introductory lecture at the Ca' Foscari University of Venezia. And is a theory which is mainly based on the concept of entity. All the thinking about the Economia Aziendale starts from considering indeed the concept of entity, which in Italian is called azienda, and is considered a unitary and durable economic institution which has long-term objectives, which has to endure for indefinite length of time. And how can the azienda survive in the long run? The azienda has to create value, and this value should be diffused, so the azienda creates value for itself and for all the stakeholders which are socially recognized. And to do this, the azienda must ensure the systematic achievement of three kinds of equilibrium: the economic equilibrium, the financial equilibrium, and the strategic equilibrium. An important characteristic of the azienda is that there's a unitary view of the azienda. It is a holistic system, and there is a strong coordination between all the elements, and all these elements should be looked at by considering simultaneously the aspects relating to the organization, to the management, and to the accounting. And an important aspect is that although Economia Aziendale was announced in 1927, it is important to highlight that the unitary view and the coordination that characterizes the concept of the azienda are still very largely agreed in Italy, and despite the intervention of legal requirements, change in regulation, or newer corporate governance models due to the introduction of the financial market in the country since 1927. So this is a really important aspect because the unitary view and the coordination are largely agreed, because still Italy is characterized by the prevalence of business-oriented entities that are actually acting in a real economic context and not in a financial market, not only in the financial market. From the accounting perspective, Economia Aziendale scholars also highlighted sometimes a bit implicitly in their works that the Economia Aziendale is based on a clean surplus accounting, and this is because this allows people to take into account, to take into strong consideration the holistic nature of the azienda. And also, and this is a crucial aspect in all of the Italian scholar booklets, Economia Aziendale states that in order to determine a reasonable measure of consumable income, it is essential to determine both the qualitative and the quantitative measure of capital that preserves future income. Still, such a notion is really important because it reflects the real information needs of the azienda as a real entity that has to create a broad value, not only for itself, not only for shareholders, but for a broad range of stakeholders. So, having described the theory, in the paper at this stage we try to demonstrate that Economia Aziendale allows the respect of the formulation T3 and T2 that we quoted before. So what we did is to just adapt the Dorsey's model formulation to the Economia Aziendale this time. The first formulation, which is T3, says that the Economia Aziendale concept of profit is true in the Economia Aziendale system only if the concept of profit is a member of the IASB system and the IASB system is coherent, or the concept of profit is a member of the AARC system star, where the AARC system made coherent according to the Keynesian doctrine of minimum inflation yields the AARC system. Still, the concept of profit is included actually in the Economia Aziendale, and all the Italian scholars have definitions of the concept of profit, but we still need to test if the condition of coherence is affected or not. So we adapted the formulation C2 to Economia Aziendale by saying that the concept of profit, that the AARC system is coherent, if all normative sentences related to the concept of profit, the concept of profit is consistent with all other members of the AARC system and their normative implications, and is derivable by a system of deductive logic or inductive generalization. And we claim in the paper that actually the condition of coherence, which wasn't respected by the IASB accounting system, is respected in the context of the Economia Aziendale theory for a number of reasons. And the first is that Economia Aziendale adopts clean surplus accounting, and this allows the respect of the essential holistic character of the azienda, and therefore we can detect coherence in relation to a number of elements. The first element is that there is a provision of accounting principle which is strongly consistent with the business model of reference, with the model of the enterprise of reference. Also, clean surplus accounting is still is strongly related to the reliance upon a measure of consumable income, as we discussed before. And this consumable income, which is evaluated from both the qualitative and the quantitative perspective, is able to preserve future income and therefore ensures the long-term sustainability of the azienda, which is, as I said before, one of the most important elements, because the azienda has to endure for indefinite length of time. And third, but probably more important from the perspective of the decision usefulness, the information needs of the model of enterprise are strongly reflected by both the clean surplus accounting and the definition of a consumable measure of income, because the main orientation of the azienda is not on financial markets, but there's a manufacturing nature, there's a business-oriented nature. And so the consideration of a consumable measure of income, which considers both the qualitative and the quantitative aspect at the same time, is a strong element that ensures coherence in the model. So at this stage, we took all these considerations about coherence and incoherence, we contrasted it with the ongoing debate on the business model, so that we run the second part of the presentation on this.
Thank you very much. If it's worth underlining, can you just go back? The three bullets at the bottom here, because they are pretty significant, they are pretty fundamental, I think. And notice, incidentally, that the second one clearly implies replacement costs of some kind. Otherwise, you cannot argue that you have sustained the capacity to replace the resources and continue to use them. So this is very fundamental. Now, what we then went on and did, or broadly speaking, the Italian lot did all this, you see. And I picked up the idea that maybe we could apply it, or we could apply it a little bit further, into the current series of bulletins which FRAIM are issuing as an input into the IASB's conceptual framework development, or supposed development project. And we just referred to two of them. And this is the one about representational faithfulness. And I think this is a wonderful quotation. Information is said to have faithful representation when it, quote, faithfully represents the phenomena that it purports to represent. Now just read that again and think what mark you would give a second-year undergraduate student if they provided that as the key definition to the essay that they were writing for you. It has faithful representation when it faithfully represents the phenomena that it purports to represent. In other words, it says absolutely nothing. And somebody, eventually indirectly, people like us, are paying millions of euros a year to the system to produce this sort of comment. But more, they then go on to look at the business model, and the business model one is very interesting. It's very topical. It's very much an ongoing issue. It's still being explored at every level, theoretically, and by the regulators. And again, I rather like this quote. In the case of non-financial institutions, which is the point that Rosanna has continually emphasised in the Italian context, it represents the end-to-end value creation process or processes of an entity within the business markets it operates. And that's not the sentence. This is not an English sentence. And it is the complete, correct quotation from the published document. More importantly, in a way, is this emphasis on cash flows. Because this is central, it seems to be central to everything. If you look at the conceptual framework, paragraph OB2 and OB3, in the revised conceptual framework, 2010, they talk about information for the estimation of cash flows. They don't necessarily claim to be estimating the cash flows, but they certainly very, very explicitly focus on the provision of information designed to assist in the estimation of cash flow. So it's all focused in the end on the cash movements this way and that way. Okay? Next one. And they give this quite long illustration in the bulletin, the IFRAG bulletin on the business model. And incidentally, this was issued in about April, May, I think, 2013, the bulletin. And they've now issued another document last December, which is a research paper on the business model. And what it does, it first of all reproduces the main one, absolutely complete. And then it goes on and discusses it for another 40 pages, without changing much. We haven't updated the paper for this yet, but it's not going to make any major difference, quite clearly. But they give this example, and I can't really shorten this. I think the best thing to do is to, I don't really want to read it right through, but you can. The key points are that we purchase cotton for 100, and we keep it, we still hold it, and then at the balance sheet date it is worth 120. So we've got these two possibilities, that the entity is it's either a shirt manufacturer or it's a speculator in cotton. And it says here, we could simply carry on and report it at its inventory cost of 100, which is the historical cost model. If it's a commodity trader that seeks to make a profit, we could show an instant gain, a realised gain, when we sell the cotton, of 20, which is profit. You see, it's realised, and we've got extra, therefore it's profit. However, there might be other ways in which the business model might impact the financial statement. If the transaction is non-recurring, it would probably have to be separately presented. Thus, the nature of an entity's business may affect the measurement of assets, reporting of profit, and presentation. And this is their little case study which they set up. And they then go on, you see, to discuss the issue of the gain of 20. So, but think about this a bit more in terms of cash flows. There will be a receipt, presumably, of 20 more than we originally thought. So in terms of the information that we need to derive from this and present transparently, there is some sort of gain of 20. There's a revenue of 20, an extra revenue of 20 somewhere. But then what happens when you've sold the cotton? Or you sold the shirts that you made with the cotton? Now it's obvious what happens, and we're talking about the continuing business. We're talking exactly about the long-term survivability of the business. We're talking about the going concern convention in the IASB way. So we have to replace the cotton. And what is the cash payment to replace the cotton? It's 20 more than the first lot was. So what is happening here, in terms of cash receipts, there may well be an extra 20 wells. In terms of cash payments, there's an extra 20 every time we sell shares. The cycle goes on to infinity, your word. So the real informational content, the real informational message in this example, is nothing to do with the gain of 20. And that's their word. It's not my word or our word, it's their word. That's not the issue. The issue is the informational content about increased future outflows to infinity. And that's the logic. And that's the coherence, which you need to derive, given the conceptual framework, given the going concern, given etc., etc., etc. That is the real message of this situation. And it's just not there in the documents, it's not there in the thinking, it is all incoherent. So, towards conclusions. Economia Aziendale and the conceptual framework share this common focus on key surplus accounting, long-run operating capability, capacity to replace all consumed resources, which is exactly the point which they fail to themselves recognise about the extra 20 to the cost of the cotton, and to continue in operation going concern. And the whole thing is incoherent, and there are more examples in the paper, we will give more now. At the moment. And we need a more coherent system, and Economia Aziendale seems to be a more coherent system. It's more logical. So if the IASB could enlarge its assumptions, including this long-term survivability, and the concept of the entity as an entity, I'll say that differently, the concept of the business as an entity, it would help us to be more coherent, more logical, and to achieve our objectives, explicitly stated in the conceptual framework, of trying to report information focused on the investor needs, the maintenance of future cash flow, the existence of future cash flows, in order to enable the business to continue to operate, to continue to be efficient, and therefore, of course, to continue to provide inputs into the outside stakeholders, the other stakeholders. One of the issues about the IASB, of course, is its narrowness of user, and we're not addressing that. But even if you, as long as the business is efficient and continues, then resources are being created, and then you can then have a separate debate about how you allocate them across stakeholders. In the introduction of this comprehensive concept of capital maintenance, the economic capital maintenance, which means the operating capital maintenance, the ability to keep doing it into the future, which will allow provision of information, preservation of capital, etc., etc. The needs of different users as well as capital providers. Yeah. So we as the IASB, the world's regulators, need to be coherent, not necessarily exactly representing, because there's nothing to represent. That's another debate, which I could talk for hours on. The subjectivity of the thing. We need to be coherent within our own arguments, within the conceptual framework has to be coherent within itself, but it isn't. And the conceptual framework needs to be coherent with the standards, it's not. And obviously the standards need to be coherent with the other standards, and they're not. So there's really a great deal to do. And there's no instant solution. Economia Aziendale doesn't tell us the answer, of course. But it does suggest a way of thinking which we think might be useful. And as Rosanna said, there are countries in the world who have similarities in their economic development and the type of business that they generally have, which are probably closer to the Italian tradition than they would be to the British or the American tradition. I mean, it's a wide of issues to whether IASB works in emerging Eastern European countries or not. Now, I've done some work with some of them, and I know what the answer is. It just illustrates the generality again. We have to be coherent, normatively, logically, within our thinking, and we have to be coherent between our thinking and what the customer needs, the customer of the accounting profession, which some of you will be trying to join. Now, we've kept talking on and on, haven't we? We invited you to interrupt, and nothing happened, not yet. So we open it out. Advice, comments on the arguments, questions on the arguments, advice to us, because this sort of paper is not the easiest type of paper to publish in the journal world. There's one at the back.
Well, just really quickly, for a thickie like me, can you just explain the difference between clean surplus and dirty surplus, what you mean? Something I've come across before.
Clean surplus is where the figure at the bottom of the income statement, of the performance statement, that's a very deliberately more vague term. The figure at the bottom of the performance statement totally explains the change in the equity of this balance sheet compared with the previous one.
Okay. Yes. That's a movement on the balance sheet rather than...
So, dirty surplus is where you have a profit of some kind at the bottom of the income statement. And then that other things happen to that before you get the closing income of the balance sheet.
Okay. Sorry about that.
And there's a big debate on this.
Oh, yeah.
About the performance statement. It's one of the many IASB projects which isn't moving.
It's 18 years now.
Sorry?
I counted. It's 18 years.
18,
it's ongoing.
Yeah. Well, lots of them are like that.
Not academics on the board, perhaps. David, you're retired now.
Yeah. Yes, exactly. I'm retired. No, that would be too much. I can't remember. Leases is 15. The G4 plus 1 statement on leases is 1999. The standard has not appeared. 15 years.
You said that it seemed to me, that, as I understand it, you're saying that the Italian standard is based on coherence, and coherence is defined primarily as consistency, being consistent in application and meaning. Is that right? And are you saying that the IASB, the standard IFRS, is not consistent?
You're certainly saying that.
That's what you're saying, okay. But why should accounting standards be consistent? Why argue this is not for something that we can measure the same thing, but the possibility that different types of business entities could, and the users of those accounts of financial of these business entities differ considerably. Insurance, for example, to start off with, maybe you could take small enterprises as well, in different. And it seems to me that where perhaps we've gone wrong, that is, shouldn't accounting standards actually fit the business and not the standards fitting not the standards fitting the business.
Hang on, say it again. Tell it again.
What I'm saying is, shouldn't the standards fit the business rather than the business fit the standards?
Yes,
Yes.
that.
But therefore, arguably, you probably wouldn't be consistent necessarily in applications of measurement of income and other measurements of assets, for instance, as well, because of the different conventions of the different types of business.
Well, let me try and answer your question.
I'm not clear on this. I'm just going through a rationale of, if you like, a thought.
But if you have, there is a statement that consistency means reporting like events the same way and unlike events in a different way.
So we're really talking about the definition of consistency.
Well, the application of consistency.
Okay.
Because if and this is the business model thing, you say. You have a building. Now, with a building, there are at least three things you can do with a building. You can occupy it and use it, IAS 16. You can use it as an investment, IAS 40. Or you can buy and sell buildings, IAS 2. Okay. And the accounting treatment is completely different under those three standards. Now, does consistency, and I'm trying to use your own way in now, does consistency require, and I use the word require as a strong word, that because the three buildings are identical, we report them in the same way? Or does consistency require that the entity which uses them as trades in them reports them as inventory, and the entity which uses shifts to category?
So business model.
Yes, yeah. Now, a belief in consistency doesn't answer that directly.
Yeah.
But what it does say is that whatever you do, you have to do consistently. And the way you decide on the answer to that question has to be consistent with your prior theories. This is the other key point. The conceptual framework ought to answer that logically,
Yeah.
if it's doing its job properly. Yeah? So, it's a non-answer, but I think it's quite a good non-answer. I would say so. It's much more complicated.
Sure.
But yes. Yes, but.
Yeah.
Not but, yes, but.
Yeah.
Ask another question, really, around practicalities, really. The old, if you like, argument against using capital maintenance, the cost-benefit of the information and understandability, the complexity of it. No one understands accounts produced under capital maintenance. What would you say? What would you say about that?
Well, all accounts have a concept of capital maintenance. The question is, which one is it, and is it any use? What I think you mean is traditional historical cost accounting, which does have a concept of capital maintenance. It's maintaining the original money investment, the number of pounds. Now that does not maintain the business.
It safeguards the shareholders.
Sorry?
It safeguards the shareholders and creditors.
Well, actually, no, it doesn't safeguard anybody.
Well,
It doesn't safeguard anybody because, can you go
It
back?
doesn't hedge the
Sorry.
volatility.
No, it's okay. It's just
This one. It doesn't do that. You see. It doesn't safeguard the shareholders. People think it does, but it doesn't.
It does in the short
And
period.
this comes back to what you said. People don't understand. You're absolutely right, but I would go further. See, not only do people not understand if you introduce replacement cost accounting, the indexation of government or what. You're right, they don't understand. But they don't understand the original simple version either. They don't understand what it doesn't do. And that's very, very dangerous.
Yes.
It's not coherent. Well, the traditional model is not coherent. Exactly.
Well, I suppose that people, when they talked about it initially, I suppose, thought about static pricing. and then you have your capital maintenance.
Yes. Although in fact, that's what we said, between 1870 and 1914, there was deflation.
Yeah.
It weren't static, they were actually going
But
down.
it's unrealistic to leave it, of course.
But broadly speaking, yes, you're right.
Capitalist economy, so
And then we had the Weimar Republic and Schmidt and Schmalenbach and different ideas. But even that's not illogical, you see, because we didn't really emphasise this, but I did point out that this 20, again, it is realised. That's irrelevant. It's still not distributable.
I thought you said, but if I bought it and I'm a shirt manufacturer, I haven't realised it.
It depends. You
Realised me, to me, is actually selling it.
Yes. Well, this is my point. It doesn't make any difference. If you haven't sold it, you need to retain it
But you
in order to replace when you do so.
Yeah.
If you have sold it, you need to retain it in order to replace. In that sense, realisation is irrelevant.
Yes.
In cash flow terms, I know what you mean.
Yeah,
It's not.
yeah.
The problem is the lawyer.
Well, perhaps we should go over to cash accounting.
Could be.
We'd overcome all these things, eh?
Go back to basics. It's very complicated, but it is very interesting. And
Well, it's been going on for so long, that this income measurement itself. I mean,
Oh, yes, the cycle goes round and round.
So, where would you see it end? Where do you think it should end? If you was the master of the conceptual framework, and how would you write in? What would you say about income measurement? Briefly, in the high level.
You say no other comprehensive income.
Well, yes, we were actually having a long discussion about recycling because we saw it different ways.
Yeah.
And Rosanna was saying, because I checked, I asked the question very explicitly about what Economia Aziendale says about recycling. And her answer was very simple: it doesn't allow it. It's on the rise, because it's all interpreted, it's all in the one document. And I think I persuaded her that that's oversimplistic. Because within this one document you have several different subsections. You have what we call the main activities, which I would call the operational activity. And then you have the other bits. So even if it's on one page, under one heading, you've still got potentially the issue of whether something which went down the bottom bit one year needs to be under the top bit the next. So the problem doesn't disappear.
We don't have holding gains losses because we recognize elements only when there's realization. I'm talking about Italian accounting standards, not international accounting standards. In the Italian accounting standards, to respect the prudence principle, you cannot, let's say, use the revaluation model. You are not allowed to revaluate. You can only depreciate, and if you have you don't have holding interest, only realized items go into the income statement. There are only a couple of, there's probably only one option, which is long-term works. So for the revenue recognition in certain cases for 3 years or 4 years works, then you can have income, not realized gains, but these are anyway realized because there's the reasonable certainty that this will be paid in the future by the client. But this is the only option. So we don't have a real other comprehensive income. There's just only a section of the income statement which is called extraordinary items. Let's say, for example, you produce cotton shirts and you have a building in the city center and you sell it, then this is an extraordinary operation, and so the plus values or the minus values go into the section of extraordinary items. So David was raising the issue, what about if you depreciate the building a couple of years before the operation and then you sell the building and you have a plus value? But I'm quite sure that before selling the building, if the reasons of the depreciation are no longer existing, then you have to come back to the original value, and then you can say,
No. Can I write on this?
Yes.
oh,
You think you're saying something?
You've only got a small space there.
Keep talking.
and you come back to the original value, and then you have to carry out your operation. So, in my view, there's no recycling between two sections. In his view, there's recycling. So we need an arbiter now. We're going to talk with the other guys in Naples and see what they think. I'm quite sure that one of them agrees with David and two of them with me.
So, in the end,
gonna
democracy,
agree
there'll be a
with
head count, you see. To come back to Robin's question, I think an abstract answer, but I think a valid answer, is that the conceptual framework should allow a business to report consistently with its own business model. And that's what users need.
Yeah.
It's what OB2 says in the conceptual framework, in effect.
Yeah.
Cash flows are entity specific.
Yeah.
Remember, fair value is not. Now, there are problems with that, of course. How do you know what its business model is? Do you believe what management says all the time? How do you audit that? There are issues. But I think that's the theoretical part. So what we were playing with this morning was you buy for 1,000 and you have depreciation of 600 over 6 years, and you then sell for 1,500. Okay? So there are two possibilities. One is that the 1,100 is extraordinary.
Why is it extraordinary?
Pardon?
Why extraordinary? You just have
She means exceptional.
Because you have the value of the trust.
She means non-ordinary.
This is an Italian separation
Oh, sorry.
in the economic
It's a translation
income
from Italian.
statement, which has the first section, which is income deriving from the core operating activity of the entity. Second section, which is the cost relating to the operating activity. There's a third section, which is the changes in value of financial activities and financial assets. And the fourth section, which is extraordinary items, which means that you, for example, carried out operations which are out of your normal operating activity, such as selling, non-ordinary, selling, building, selling.
The Anglo-Saxon problem for old people like us is that the IASB used to have a concept of extraordinary items with a very precise definition.
Which is different
And
from the
it's,
Italian
well,
one.
not only is it different, it's disappeared. See, it no longer exists. This is the confusion. But it's not ordinary. So you've either got this 1,100 in the bottom bit, or you write back the 600 into the top bit, and you've got 500 in the bottom bit. You see, you can argue it either way, and we haven't got any further. This is the next bit in our little debate. But it's a very fair question. But it all suggests, at minimum, to me, the possibility that there is still an issue about recycling, about where you put things, even though you've got one spin.
Well, you could probably argue that maybe the numbers aren't sufficient for users to make decisions and interpret situations that you're describing. And there just has to be more narrative.
Yes, exactly.
I don't know.
In Italy, you are required to describe in detail these kind of operations in the notes to financial statements. But we are not talking about the positioning in the income statement, because definitely the position in Italy has to be not ordinary items. The problem is the amount that goes to ordinary items, because if you don't have depreciations, then you buy a building at 1,000, sell it in the same year, so that you're going to have amortization problems for 1,500, then 500 is the not ordinary income. But then we were wondering, what about if there are depreciations or not? And my feeling is that if you depreciate and that you sell to a higher value, then this means that you need to come back to the original value, because the reasons for depreciating are no longer existing. and therefore, in the end, you have 500 in the ordinary assets. It's a mess, isn't it?
No, it isn't, because you're thinking about depreciation in a completely different way. Depreciation is consumption. In your example there, you have consumed 60% of your asset, if that's your depreciation assessment. And it's the 40% you've got left that has increased in value.
Well, A, you have consumed 60% of the usefulness of the machine.
Whatever, yeah.
Yes, agree?
Yes.
B, the cost of consuming that 60% is zero. And that's what you don't accept.
No, I don't accept
No,
that.
I-
No, I don't
The cost-
accept that at all. There is a cost.
But I can prove the cost is zero, retrospectively. You know, it's easy afterwards. Hindsight is a wonderful thing. But we know the cost was zero because we've actually made a profit on selling it, over and above the original. The cost was negative.
No, because you've made a profit on selling what's left over. That's what's gone up. If you had the whole thing, you'd get even more for it, wouldn't you?
We have got the whole thing physically.
But it would be a new whatever machine. You would get an even higher price for it.
If it was brand new, I would be, yes, I do with that. I do with that. But that's correct. I'm not sure it's relevant because what we're saying is we had this outflow of 1,000. How much of this outflow of 1,000 has been lost forever? The answer is nil. Because there's the 60% of nil is nil.
I can see on an asset like land, because as you know, we don't depreciate land for that because it has an infinite, in our human experience, an infinite life. But nothing else has an infinite life. Nothing else can't be used up and consumed, really. Can it not?
That is consumed by the sea sometimes.
Well, obviously, yeah. I said in our human experience.
Hang on, yes. Well, Great Britain is, I know Great Britain is, you know, the channel is getting wider between Britain and France. The English channel is getting wider.
Really?
Yeah, but I thought Great Britain was actually moving west. In other words, it's not just getting, Britain is not getting smaller. Cornwall is getting larger at the same time as Sussex gets smaller.
Except with Dawlish, which is Devon.
Yeah.
Can I just take it in a slightly different direction, if you don't mind? Because I understand the concept of capital maintenance and how theoretically it's highly desirable. But am I right in thinking that your view is that if a business has something like a building that it uses, an office building, an office building that it uses, that because you'd have to replace that building in order to carry on in business, the going concern, right, that you shouldn't take any gains on that because you haven't actually got any gains because you'd have to replace it to carry on as a business. Is that in terms of capital maintenance? Yeah. I remember living through the asset stripping era, as I'm sure you do as well, in that sometimes users need information to make business decisions, not based on something like, theoretical as capital maintenance. They need to know what their assets, what their business is worth, in order to make decisions which mean that the business can carry on as a going concern and isn't stripped in the short term.
But you're talking about the business being valued on assets.
But I'm talking about information needs of users.
But are they interested in assets anymore?
Yeah, well, they should be. You're quite right.
I mean, it seems to me that we've moved away from there because of problems about knowledge-based business.
Fair value has informational content. Fair value is useful. And what you're getting at, I think, is the notion of opportunity cost, essentially. Because if I carry on using this thing to keep my business going to infinity, I have foregone the opportunity of selling it.
Yeah.
Now, fair value tells me what I would have got if I sold it. Now, was I right not to sell it? And the answer is well, in order to answer that question, I have to know what the fair value was. I have to know what the benefits would have been if I had done something I didn't do. Yeah? So fair value, in other words, yes, the information you're talking about is relevant, but the information you're talking about does not answer the question of the performance of the business on the going concern basis and the cash flows which are relevant to that. Fair value is what you would have done if you'd sold it, which you haven't, and you can't in a general case.
But you might be wanting to make that decision.
You are.
You know, somebody's making you an offer. What you need that information to and really the continuation is not in your mind at that point. The capital maintenance is not what you need to know. What you need to know is what it's actually worth, this building, that you actually don't want to use anymore because you're going to sell.
And to support your argument, I'd take your argument slightly further in the same direction that you're going, which is that the stakeholders need to appraise management's decision making in not selling it. So it's not just a question of management needs information in order to decide whether to sell it or use it. The stakeholders need that information to appraise the competence of the managers. Because the manager will keep the thing because they want the business, they want their business to keep going and get their managerial fee, director's fee next year. But they may be wrong. This may not be in the interest of the stakeholders. And the stakeholders need this sort of information we're talking about. Yes. But it doesn't answer this question.
I'm afraid I have to go, but really interesting. Thank you very much.
Well, I think everyone seems to be...
Well, I just have to take this conference call. You're one of the people you've been slagging off.
Okay.
Well, I think what we might say in conclusion then, David, is one of the points I can remember teaching students from your book, which is we are going to be much the poorer if national jurisdictions don't maintain this body of expertise that went into developing national standards in the past. Because here we have a rich example that the IASB potentially could be drawing upon.
Italy has this enormously long, very rich theoretical tradition. And Germany has one as well.
Yeah.
Britain doesn't, France doesn't. A little bit a few hundred years ago, not since. And Britain certainly doesn't. But Italy does. Yes, you're right. I mean, the IASB can't even write English.
As you demonstrated.
I must confess that Italian academics.
Sorry?
I must confess the Italian academic because do you remember me arguing with people at the IDEA conference?
You always are.
Because they were commenting on these issues on financial statement presentation. And there's a group of Italian academic who's strongly focused on historical cost and prudence and everything. But my view is not that the point is not only historical cost, rather than on the prudence principle is something that has theoretical foundations and theoretical issues. I answered to a question saying that if Italian academics do not set common letters and do not intervene and interact in the debate, the IASB will never listen to these issues.
Yeah.
Probably the biggest challenge you actually have is, once you develop the paper, is expressing it in a form that they can understand, you know.
More practically.
Yes.
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 See, we presented this paper, the first time we presented this paper was at the Italian conference in Lecce in the autumn, down in the hill. And somebody said afterwards, what you're trying to do is to sort of explain and sell Economia Aziendale in the Italian tradition outside Italy. What can we do to help make this work? And my answer was that one thing you don't do is what they did at the conference, what they had done at the conference, which they have a separate track called Economia Aziendale, all papers in Italian only with no translation. And that's simple. Stupid.
Yeah, it was lost occasion, you know.
If you want to sell your product, you have to market your product.
Well, I'm sure we'll go on talking informally afterwards. But shall we thank David and Rosanna in the usual way? Thank you so much for entertaining us. It's a wonderful new idea, and you know we must feed it into the students' mind. To be critical.
Coherent liquid.
Yeah.
Thank you very much.
Yeah, sure. Oh, you mean the structure of the income statement?
I know this bit.
It's almost the same, I'm sure.
Building is not elaborate.
Yes, you know the IASB has similar main difference their values and so the main criteria is historical cost, historical cost, just a couple of property but at certain strong I've done that. Then you have to immediately recognize this loss.
I really don't get my head around
It depends on what the loss is about. You can have a loss, sudden loss, or shareholders, the main responsibility given where you can call the international list. About 300 listed companies. The nature of business by families, 15 so small and medium enterprises.
So you're feeling quite happy. So can I take this again? You are now an honorary member of
the European Union requires the
you would like to keep on.
But the question is what they do
and this creates
for the business, non-business.
another